Let me tell you something. The price of oil may fluctuate, but this guy is so dumb. What the markets realized after the first major drop is that each step that President Trump took and they saw that economic disaster didn't unfold, the market started to realize that. So yes, of course, crude oil came down. But a sign of President Trump's success is the other markets. Everything was soaring today because they now have faith that the worst when it comes to all of this is most certainly over. Let's see if the professionals agree with me on this. Managing partner at Chapwood Investments here in Dallas, Texas, Ed Butowski, my good buddy, is back with us. Ed, welcome to the program.
Well, thanks for having me, Grant.
All right, it's good to see you, my friend. Do you agree with my assessment?
Without question. And the other reason that the stock market went up is that when you have the cost of energy going down, oil prices, that allows companies to retain a lot of their profit and they have smaller expenses. So it's all about earnings and interest rates. And the Strait of Hormuz is really at the, kind of the most important part of where interest rates are going to go in this country. And right now they're going to certainly be going lower because the cost of goods are going to go lower because of the brilliant move that President Trump has made.
Ed, one of the things you can't get away from, and this isn't an investment show, but I know a lot of people watching the show have 401k plans and they've got a little money in the stock market. The fundamentals were great. We've got first quarter earnings coming out. I think you're going to see them being very positive for most of these big companies. That didn't just somehow disappear during the Iran war. And I think maybe the markets got back to realizing, hey, the fundamentals in this country are very, very good, Ed.
Yeah, the fundamentals are very good. Short-term interest rates are going to come lower. Long-term interest rates, and I know I don't want to get too financial for the show, but long-term interest rates are probably going to go a little higher. So that 30-year mortgage is probably going to stay closer to 7%, even if interest rates on the short end get cut. But what you have to also remember is the flow of oil back to China is a really important thing because we do want the Chinese economy to do well, and they were getting to a point where there wasn't going to be a lot of oil and gas. And my wife and I are on our way to a trip to Europe, and we heard that they're only 6 weeks away from running out of airline fuel. So things were starting to get kind of dicey, and we're at a really good spot right now. It's kind of a Hakuna Matata time where there's no worries, they say in the show, for the rest of your life. But right now there's no worries at all.
Yeah. Lastly, Ed, how big was it to see the rebound today? And really, I would say the rebound from when we had that 10% correction to where we are today, real quick, if you can, how big was all of that?
Well, this is enormous because it was done with such ferocity that you're not going to see $110, $120 on crude oil anytime in the next couple of years. You're going to see lower prices. And remember that big oil companies can make money at $20 or more. So you're going to see oil prices come a lot lower, probably down to around the $60, $70 level like they should be.
Well, I have a little disagreement. I think for oil companies, they really need around $50 a barrel to incentivize them to keep drilling. They maybe can eke out money at 20, but for them to keep drilling and want to really just unleash, I think it's got to be around 50. But either way, we're headed in the right direction. It's always good to see you, my friend. Thank you, Ed Butowski, Chapwood Investments. We appreciate you.
Thanks, Grant.